This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Energy executives say they are looking past current ultra-cheap gas prices and betting on a coming wave of new liquefied natural gas (LNG) plants to lift demand and prices for the fuel. Natural gas prices have fallen by 1/3 this year, undercut by a warmer winter, outages at LNG facilities and higher than expected output. The growth in solar and wind power and a pause on new U.S. LNG export permit reviews also have clouded the outlook for future gas demand. Oversupply in West Texas, home of the top U.S. oil field, had prices this week at a negative 26 cents per million British thermal units, MMBTU, requiring gas producers to pay someone to take the fuel. U.S. gas prices were trading at $1.66 per MMBTU on Friday, down 74% from the average price in 2022.
Oil prices slipped on Friday and were flat on the week as the possibility of a ceasefire in Gaza weakened crude benchmarks, while the war in Europe and shrinking U.S. rig count cushioned the fall. Brent futures for May delivery settled at $85.43, losing 35 cents. U.S. crude settled at $80.63 a barrel, falling 44 cents. Both benchmarks logged lesser than 1% change on the week. Everyone is watching for what the weekend will bring with Gaza, said John Kilduff, partner with Again Capital LLC, adding that successful peace talks would prompt Yemen's Houthi rebels to allow oil tankers to pass through the Red Sea.
Moving on to the top news in the energy sector.
Crude oil physical markets in Europe and Africa have weakened in response to peak refinery maintenance and extra supply from the United States and Saudi Arabia, dampening the impact of Red Sea shipping delays, according to traders, flows data and analysts. These factors, to some extent, mitigate the effect that rising crude prices will have on energy costs. A jump in energy costs could threaten to unwind some of the recent falls in global inflation just as central banks are expected to begin cutting interest rates. The outright Brent futures price, having stayed in a narrow range for much of 2024, has gained in the last week partly due to Ukrainian attacks on Russian refineries. Brent traded at around $85 a barrel on Thursday, up 10% this year.
Private equity firms are increasing their direct oversight of energy transition companies in their portfolios, taking on added duties to address runaway costs from supply chain issues and preserve valuations, executives said at the CERAWeek Energy Conference this week. Excitement around new energy technologies saw billions of dollars of investment poured in the last 4 years into those aiming to shape the energy transition with biofuels, hydrogen, solar, wind and carbon removal technologies. But the COVID-19 pandemic, subsequent supply chain shortages of materials and equipment, slower than expected technological developments, and soaring demand for fossil fuels have left many new energy firms in a precarious state. Next, we have the top news in metal markets. The Democratic Republic of the Congo overtook Peru as the world's second-largest copper producer in 2023, though it still lags the South American country in exports, official data from both nations show. Congo produced about 2.84 million tons of copper last year, the country's central bank reported. Peru's output was 2.76 million tons, the Andean country's mining and energy ministry said. Congo has been reeling in Peru's number 2 copper spot over recent years, with flagging mining investment in Peru linked to red tape and recent political turmoil and protests. Chile remains the distant top producer of the red metal.
Iron ore futures were mixed on Friday, but set for a weekly gain on mounting anticipation of a pickup in demand in top consumer China amid signs of improving steel consumption. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade 1.50% higher at 844 yuan, $116.79 a metric ton, for a week-on-week rise of 6.1%. Average daily hot metal output inched up 0.3% from last week to 2.21 million tons as of March 22, a survey of Chinese steelmakers showed, reversing a 4-week downtrend. while profitability climbed to 22.94% from 21.21%, according to data from consultancy MySteel.
We will now look at the top news in the agricultural sector.
The US is projected to import in the current crop year, October to September, the largest amount of high-duty sugar in at least 6 years, due mostly to falling supplies from trade partner Mexico, broker Charnocow said in a report on Friday. The US is estimated to import in 2023-24 around 750,000 metric tons of sugar that will be taxed at the highest level of import duties, $360 per ton, or 16.33 cents per pound, said Charnocow. That type of imports keep consumer sugar prices in the country very high, nearly double the international benchmark. The US government has programs for cheaper sugar imports at lower tariffs, but has been unable to fulfill those due to limited supplies in countries holding quotas.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.